Sending data.
In today's fast-moving job market, staying ahead means keeping
It
your
looks
skills
like we are
updated.
streaming on
That's why at
Substack.
University
That's
of
great
Maryland Global
news.
Campus, we offer an affordable,
And it looks
skills-based
like
education that helps
we are
push your
streaming on
capabilities
YouTube.
and
That's
career
great news.
forward.
And
We'll
X.
equip you with the know-how to apply
great
emerging
news.
technologies like AI,
That's really cool.
data science, and automation.
Never done this before,
Whether
all
you wanna
three,
move
only
up or
on
move on to
YouTube
something
and
new,
X.
UMGC can teach you the skills you need to succeed again. No application fee if you apply by September 1st at umgc.edu.
Now, there's even more to love about E-Trade.
We're going to be just reviewing some
cutting-edge
stuff
platforms on web, desktop,
on
and
Nvidia.
mobile. Redefine seamless trading.
And
Move with
I
the
want
speed
to
of
play the
markets
live
with
earnings
powerful
call
tools that help simplify
once
trading
it
stocks,
is
options,
on,
futures, and now,
which I think
crypto.
won't be till 5 p.m. Is
Diversify
that
your
correct?
portfolio with secure,
But we should
low-cost
get
crypto
the
trading. Plus,
earnings
get
report
expert
come out
research
right
from
after
Morgan
4.
Stanley
They
to
say
help you
like
stay
4:15,
one step ahead.
4:20. You know, I'm expecting it to come out a little bit before
the Market
that.
Zone is sponsored by E-Trade from Morgan
So
Stanley.
I
Elevate your trading
prepared
with Power
myself
E-Trade
here.
Pro.
And of course, you know, we're not trading, right? So a lot of the stuff we'll be talking about is more for long-term investing. It's more so, you know, talking about somebody that's got almost a 5,000% gain on Nvidia and what to do about it.
I mean, obviously, market hesitating here. It's absorbed a lot. You know, if you think back to all the other amazing semiconductor earnings reports we got over the last couple of months, most of them were stellar. You did get negative stock reactions.
And
Maybe we've
also,
already now set up for a little
I have
bit
to
of
actually work a little bit.
It certainly seems like there would be room for relief
leading up to this.
both for Nvidia shares and the
So
broader
as soon
market
as,
if we got through this
so in case
with a
I'm not
clean
talking,
number, and
you know, we
guidance that are from
can,
the long-term picture, but it's hard not to see the stock
you can
is
ignore me,
capped and maybe
right?
the market is gonna
So I
have
got
a little bit of
CNBC on in the
overlay of
background. Not
skepticism
sure
just
if you
'cause
can
the big
hear it.
picture concerns about all
And
the
drop a
financing
comment
and
if
the
you
rest
can't hear
are
it.
not going to go away in one quarter. Maybe what could change the story if we get some kind of a shock and awe capital return announcement from Nvidia, share buybacks, dividends. Who knows if that's this quarter's business, but it hovers out there.
You think this is more about tonight how other stocks trade rather than what Nvidia does?
Yeah, I think it's getting clear of it and then really seeing if there's demand after this little 2% pullback in the S&P 500 for the broader complex and for semis in general, which have given back a lot of their reflex bounce, but are trying to hold their ground here at some pretty crucial levels.
All right, can't wait to see you in overtime. It's going to be a big one, about 5 minutes away from overtime with Mike Santoli. All right, Oliver, tell me what you see from SIBO. Are we talking about Nvidia also?
Yes, sir. Arguably the biggest potential for this report and for the king of AI, the OG, Scott, in 18 months. That's according to options pricing. They're looking at a 6% swing in the stock, which is double the median post-earnings swing of the past 4 quarters and what would be the biggest earnings move for the stock since February last year.
Just making sure
Bullish calls
I didn't get
are
it.
much more expensive than puts, and the ratio of open call
Okay, so my
contracts to
chat on
puts
Substack
suggests
is not
traders are
working.
more actively preparing for a rally than a sell-off. The highest concentration of trading is happening in puts and calls tied to the 220 strike, where there's almost 4 times as many calls open than puts. For bears, Nvidia has dropped the day after its last 4 reports. They're hoping this thing flirts with the $200 level because there's very little hedging happening below that. So if it cracks it, it would get ugly.
On live
but right
chat.
now, definitively a bullish lean, Scott.
Can you send something?
All right, good stuff, Oliver. Appreciate that very much. Christina, the last words from you before this hits in less than, well, 5 minutes, 10 minutes or so.
Yeah, at 4:20 Eastern, but the numbers Wall Street is whispering data center revenue up around 150% from a year ago, and next quarter guidance
You
north
wrote
of
waiting for 4 p.m.
$105 billion. Some even saying
Like,
109
oh,
billion.
okay, I got you.
Watch three things beyond
Okay,
the guide. So
thanks.
margins, whether Nvidia can hold that mid-70s line as memory costs climb. The Rubin
Okay,
ramp,
so a
whether
few
it's the
things
next
here.
big chip is actually landing on schedule. There's some concerns with
let
that.
me
with
go over
strong
here and
Blackwell
read what I
sales
had to
cushioning
say.
any early gaps.
So,
and then customers.
I think
Proof that
that,
demand is spreading.
let's go
beyond
over the
big
numbers real
four
briefly
cloud
on
names
Nvidia
into AI
earnings.
startups, enterprise,
$92
and
billion
government. Also listening to CEO
is
Jensen
the
Huang
estimate
pushing back
revenue.
on the
It
circular
looks
finance
like
worry, the criticism that Nvidia is bankrolling its own
92.07 billion if we're
customers.
being
That actually
exact.
moved the stock
It looks
more
like
than the
Visible
beat
Alpha
itself.
has 92.16 billion.
Wait for you. Look forward to all
Nvidia's
that,
own
Christina. Thanks so
guide
much. Okay,
was
Stacey,
only
you are in agreement,
actually
I think, with all of the
91.0
stuff that
billion
Christina laid
plus
out. Rubin
minus
ramp,
2
gross
negative
margins,
plus
upgrade to the
minus
outlook,
2%.
financing deals.
So it looks like we're not going to, I don't care about adjusted EPS.
She was talking about non-hyperscale customers. So
Podcast why we don't care about EPS anymore. But we do care about data center revenue, of course. You know, we want to see something higher than what estimates are calling for, 85.67 billion. Now, most of the folks out there have anywhere from 75 to 85, a lot of 80 billions. You know, I think something above 86 billion would be actually a win, of course. And then gross margin, they guide at 75% non-GAAP. And whether they hold the 75 handle through the product transition and memory costs, yeah. So, of course, we'll probably talk about this
free cash flow. We're going to slow things down.
Q3 full year 2027 guide. I think we're not going to get much. We'll get Q3. The consensus for the forward number is 104 billion. And, you know, of course, anything above that that looks sexy is going to be very positive for the stock, in my opinion. Okay. So we're not trading this, right? This is for long-term investors.
Brian Belsky said earlier on this program, and he owns the stock and loves the company.
What we do have here is some other information that I think traders are going to be looking at, right? So they're going to be framing, or they're going to be looking at credit immediately, accounts receivables aging immediately. That's what they care about. Any footnotes there buried in the earnings report. So I think that's what they want to look at, and that's the circular funding type of thesis, right? So since we are long-term investors here, and you know, we just have to, you know, decide, you know, do you trim profits if you're up 5,000% on this name like myself, or do we buy and hold like we do every single quarter? But I think this is a really important earnings call, only because of the stock action. I mean, the price action's been awful, right? We all know that. So I think it really does have an opportunity to see some good volume come in and, you know, turn green quite a bit. But who knows, you know, and it could sell off into into the night, you know, during the earnings call, can also sell off. We don't know. You know, I took profits in 2024. And I had to pay a huge, nice tax bill in 2025. I don't want to see anything about dividend increases, of course. You don't want to hear that. You know, I was thinking the other night, maybe it's possible they're going to bring up purchasing Perplexity for $30 billion. I think that would be interesting. You know, maybe they were waiting to make the announcement tonight. But the more I thought about it, I was thinking, like, it doesn't sound like that's going to occur, does it? So yeah, you know, long-term investors are looking at a lot of different information than traders. You know, there are literally day traders, swing traders that are going to be buying the stock. I mean, trading the stock.
We have a great panel to react.
I think that's a little foolish, to be honest with you, but you know, it works. It works.
But that's not all. Several other big names reporting: Salesforce, CrowdStrike, Synopsys among them. And in just a few minutes after those earnings come out, we'll be hearing from Salesforce CEO Mark Benioff.
So
ahead of all that news, stocks remained in their holding pattern. The Dow down about
you know, Mark Rudijev just joined on Substack. I see you, Mark.
Before the close, the Nasdaq and Nasdaq 100 also down just slightly. There were, as always, some individual stocks making some big moves. Let's get to Christina Partsinevelos with those. Christina.
Yeah, and that's exactly where I want to start. The consumer and where they're still spending. Abercrombie & Fitch jumped after raising its full-year profit outlook. A roughly $100 million
Also, I had Bagholder.
The namesake Abercrombie brand, I should say, did the heavy
right
lifting.
To me right before I came on here, and he said, "Hey, do you own any deep out of the money put options? Leaps as insurance against your Nvidia position? You know, as a hedge." I said, "Nope."
Software, though, was like kind of the soft spot
Never
yesterday.
have I
The
ever
read-through
done that.
From Dick's warning on Foot Locker
Never
kept
have
the
I
pressure
ever
on
done
Nike
that.
today, still
Not a bad
hovering near
idea. I'm
its
not against
lowest
it.
level since
That's just
2014.
not how I roll.
Smucker spread the some cheer, lifting its full-year outlook on higher coffee
You know,
prices.
if I were a hedge fund and I had clients to answer
The
to,
CEO told us on Squawk Box,
yeah, I would
tariff
probably
refunds
have
will
to do a
help
little
invest
hedging, wouldn't
in
I?
the business and help them also pay down debt. And now, quick pivot to software, because there's a lot
Okay,
of movers there.
we'll
where
take the
guidance
global map
specifically
out
did
so people
a
can
lot of
see the
damage.
screen.
Intuit slid
I'll
on
probably
a
go
weak
through
outlook, and Bank of America
X feed
downgrades
first
neutral, with Bank
to
of
get
America
the
warning
initial,
cheaper AI-powered tax tools are just taking share from
stream.
TurboTax.
And then we'll get the news, and then we'll go to the chart. I'll try to put the chart in the corner
parts of the software complex,
so people can see the stock price without my face
Zoom
covering
fell
it.
about roughly 6% today, even after a beat as soft profit guidance really overshadowed its strongest enterprise growth in 3
Economic calendar,
years.
goodbye. We got
Christina,
jobless
thank
claims
you.
tomorrow. We got
Salesforce earnings are out. Kate Rooney has the numbers.
Jackson
Kate.
Hole on
Hey,
Friday.
Mike, it's looking like a beat on revenue for Salesforce, and then slightly ahead as
Salesforce
well on
just came
Q3
out.
guidance. It was $11.34 billion in revenue for the quarter versus about $11.32 on the estimate. Bottom line, we've got an adjusted EPS number, $5.90, I should say. That is the adjusted number. We're not going to compare this one. There is, from what we're seeing, a massive investment gain, about $2.6 billion. It does appear to be from an investment in Anthropic. They don't say that specifically, but it has been propping up other big tech earnings that we've seen. It's a similar dynamic to what we
Salesforce.
saw with Microsoft, for example, and the company did raise a massive round in the quarter, so a lot of these
Revenue
companies have needed to mark that up.
beat
It has
11% year over
boost
year.
earnings, net income for Salesforce in the quarter,
EPS
$3.5 billion. Some
beat
key
big
segment
time
revenue came in
year
better
over
than
year.
expected as well. Subscription and support
GAAP
was in
EPS
line,
beat big time
billings in line,
year over year.
and then I mentioned guidance that was ahead of
And we
expectations,
got,
at least at the midpoint, both on Q3
what else we
revenue
have?
and
Raises
EPS.
guidance.
Full year revenue guidance finally slightly
Does it
higher
look
at the
like
midpoint
they are
of that
raising
range,
guidance?
And then the EPS guidance number for the full year, we're also not
I
going to
think
compare
they're not.
because of that
Doesn't
hefty
look like they're
investment
raising
gain
guidance,
in
so I wouldn't
Q2
be
as well. It looks
surprised
like
if the stock's
up more
getting
than
hit a little
6%
bit.
here after hours, Mike. Back
Comments, AI is delivering
Yeah,
value
absolutely.
across
Takes it back,
every layer of our
several
platform. We're
months,
seeing
to
incredible
last time
demand
we
for
reviewed
our
prices
AI
for
and data
Salesforce.
products with
Kate,
ARR
thank you very much.
about to
As we
cross
wait
$4
for
billion.
Nvidia's results, what could the report
Let's
mean
see
for
what
the
the
overall
stock's
market?
doing.
So far, it's managed to rally without Nvidia, so can it continue to do so? Joining me now is Paul Hickey from Bespoke Investment Group. Paul, good
Stock's
to
up
see you.
10%. I was
As a matter
way
of fact,
wrong.
you go back to Nvidia's last earnings report 3 months ago. Nvidia shares are down, say 5%. S&P's up 3.5%. What does it say about
9.6%
for their numbers?
should be able to
and
see
part
it
of
on
the
the
overall
screen.
AI picture for the market?
Well, it's funny. It's the biggest stock in the market, so it's going to obviously have
So,
an impact. Just what
looks
it
like
does
we
on
got
the
a lot of
market. And
people
you
on
mentioned
from
on the market
Substack.
and AI.
Nobody
You
on
didn't mention
X or YouTube
semiconductors.
out there?
Semiconductors, it's the largest component of the semiconductor, of the stocks, but it has zero correlation to the stocks over the last 3 months. It's less than any other stock in the stocks. And what's really interesting is I did something this morning. I bought a pack of Marlboros this morning, and that's because Altria has more of a correlation to the stocks than Nvidia does. So in that respect, we say what's good for Nvidia is going to be good for the stocks. It's actually the opposite. Earlier in the year when the semis were doing great, Nvidia was underperforming, and now when the semis have been doing poorly, Nvidia has been outperforming the semis. So I wouldn't put too much weight into it. It's a big market player, and it's going to have an impact. But I think the days of the hyper growth in the stock price are behind it. There's so many people focusing on the stock that it's hard to surprise the market.
I mean, Nvidia, along with Broadcom to a lesser degree over the last year, have really just traded as these slower moving, mature
Got a
versions
total of
what's going
3 people
in
on
semis,
YouTube
and obviously
watching.
All the excitement is in memory and CPU makers, all the rest of it. But it's also reflective of how the overall market has managed to
see
just kind
X.
of
I don't even know
absorb
if
these
it's working
areas of the
on
market
X.
that had to correct.
Right.
Semis in the last couple of months. And rotate around, stay in this incredibly narrow band.
It's you have the VIX. The VIX is some of it well below average for August. The range for August is on pace to be the narrowest since 1994. So it's incredibly nothing at the index
Salesforce
level,
doing
but
back
there's
to
lots of noise
7.9%?
outside. We've seen Moderna, biggest move of an S&P 500 stock ever. You saw Bitcoin hit its most overbought levels on record last week. So you've seen these big moves, but the rotation. And so whereas growth has lagged, you've seen value pick up the slack. The value index has just been making steadily new high after new high, and it hasn't even had a pullback.
Let's see. Yeah, maybe Nvidia we're not going to get
so you've seen this massive
until
push-pull between growth and value ever since COVID, actually, where you see this massive
closer
underperformance
to
for value, and then it snaps back.
Did you guys
So I
see
think right
Palo
now
Alto
we're in
is
one of these
exploring
periods where value
acquiring
has decided to
Datadog and
stay.
Okta?
But again, we always come back to the fact that this is an AI bull market, and so eventually, if this bull market's going to continue, you're going to want to see the AI stocks continue to lead.
We do actually have more news. Also involves
CrowdStrike
Q2
Q2 27 earnings highlights. Did you guys know CrowdStrike was reporting today?
Here from Anthropic and Salesforce. This is about a deeper partnership between the AI giant and Salesforce. They're calling it Claudeforce. It's bringing Claude, which is the chatbot from Anthropic, a lot deeper inside of Salesforce and Slack as well. They say here it's meant to help companies integrate Salesforce and their data so Claude can pull some of the relevant data, generate the customer interface as well. And agents in this announcement appear to be a big highlight. We're talking a lot about AI agents and basically helping take actions on the behalf of customers. It does also look like Claude is becoming a bit more of an interface to Salesforce. And Salesforce here, at least according to this press release, is becoming a bit more of a data layer.
Something that really bugs me
Acknowledgement that some of these AI
if you are on
becoming, in some ways, more of a front door to enterprise software. Again, though, a partnership,
720 or
joint
1080
here, and
video
Salesforce
quality
does
for
want
some
to own,
reason.
they say, the
auto
secure plumbing
is
behind all of this. And also for Anthropic, I
on
would say,
480.
big distribution
I
win
don't know
for
why.
enterprise. That's a
That bugs
key
the
area
shit
that
out of
they've
me.
been going after as well.
Okay, so D-Rock is saying the TV is a little loud but can hear you.
The customer data.
Okay,
Sorry,
understood.
I'm going to mute that call.
I don't plan on having the
But big
TV
news.
on
It
the whole
looks like
time.
You can see Salesforce reacting here up more than 10%.
Yeah, you do. You got to keep the hoot and holler on at all times, Kate. Thank you very much. Yeah, Salesforce
Okay, so
up now
CrowdStrike, we got
11%,
big numbers here. Let's see what the stock's doing. I mean, big beat, 26% year over year on revenue.
Here on Overtime, Jim Cramer will be talking to Dario Amodei.
We're raising our full year fiscal 2027 new net ARR growth outlook by 630 basis points.
The fact that every company that was, I guess, targeted as a potential.
I didn't even know they were
victim,
reporting today.
I
don't own the stock. That's probably why.
Going to want to, obviously
CrowdStrike
make itself
up 10%.
into part of the solution.
This is looking good
with Anthropic here. One of the critiques, of course, is
good.
that Anthropic and OpenAI are ultimately the source
Setting up
of
for
so
a
much
glorious
that's going on
day
in semis and the build out and everything else, and they still have to
in
raise the
Nvidia.
money.
We'll see,
There are
though.
a lot of the
We'll see.
backlog of orders and everything, but for now, the market says you have to be in league with them.
Yeah, no, and I think so. They're the big customers, but you come back to Nvidia and the prospects for the stock. You're in a situation where you're seeing competition. Everyone talks about the memory stock, saying there's going to be increased supply down the road and down the years. In AI with the GPUs, you're starting to see companies competing on inference, where Nvidia still has the lead on learning, but the inference side, you're starting to see competition there. So you're
not streaming anymore.
Everyone said Nvidia had this moat that couldn't be conquered. And on one side, they still do it, but on the other side, we're seeing a lot more competition come in, and that's just going to, has the potential to keep margins in check, which we'll see in 20 minutes.
No, exactly right. I think that's one of those things hovering over this whole story. Paul, thanks very much. Talk to you again.
I think it looks like I was frozen.
So, what will Nvidia mean for the overall AI trade? Let's bring in Deepwater Asset Management managing partner Gene Munster. Gene, pretty much everybody acknowledges the numbers themselves are great. Guidance is probably going to be in line. The market's viewing this, though,
I think it's time to start focusing, narrowing in
its maturity.
on
What's the next move or potential turn in the story?
I think we're
for
getting
Nvidia?
close here.
Well, maybe I'll give the potential move in 20 minutes from now, Mike, is just to kind of set what the bar really is here. This is about navigating, predicting the slope of decelerating growth rates. Actually, the size of NVIDIA, we also often talk about the law of big numbers, and it's actually smaller than Google, the size of NVIDIA's business. But this quarter, if you look at what the bar is, it's for $92.5 billion, call it. But last quarter, this is in the topic of navigating those decelerating growth rates. Last quarter, in April, if you adjust for China, basically take China out because that ended in April of 25, it would have grown 107%. So the magic number tonight, if they hit 96.8 billion, again, the street's at 92, so that's 5% upside. If they hit 96.8 billion and you adjust out for April, that would imply a similar growth rate, 107% as we saw in April. That would be a huge win. So I don't think we're going to get there, but I just want to flag that number. the guidance. They're going to give a guidance. They're going to give a plus or minus 2%. The magic number for that is for a similar guide up that we saw 3 months ago, and that would put us just above 109 billion. Now the street's at 104. So I just want to kind of start there, because your question about what does it say about the market, it starts with what the reaction is going to be to these
came
numbers.
out with
and
earnings
I think those
as
are
well.
the two most important numbers kind of going into this. As far as the bigger picture,
up
I think
14%.
that, the setup that CNBC has done here has really fleshed out most of this. I would just add that the dynamic around what's happening with hyperscalers and the non-hyperscalers, that handoff, that's really the narrative that's developing here. If we look at what the growth rates are going to be next year, hyperscalers are expected that business to grow 41%, and the non-hyperscalers
up 15,
about 60.
almost
So that's going to be a
16%.
flip-flop from what we saw on calendar 26. That's the other piece. We're going to get that breakdown when the 10Q comes out, which is probably going to be about 15 minutes after
so
earnings.
I guess
those
I'll
are
break the
kind of
news
key things
now
I'm
if
gonna be
anybody's
focusing in on,
listening.
Mike.
That's right. Yeah, the company has started to break that out. Two separate categories of customers.
Meta today.
So, Gene, the first 2.5 years of the whole,
as soon as the news came out that they settled,
monster theme here
so
after
I don't know if I'm
ChatGPT.
up
It was
on
such a
Meta
simple story for Nvidia. It was all the hyperscalers
didn't
are
even
handing
check.
what
No
would be
stop
their
loss
free
in.
cash
I
flow
don't
to
think it's a
Nvidia.
trade.
Literally
It might be a
half of
swing
that
trade
falls
for
to the
me.
bottom line of Nvidia.
But I did buy
as net
Meta
income.
today
The market
after
was
the
happy to put like a 30 times multiple on Nvidia's earnings. All of a
lawsuit was
sudden, it was
settled.
net additive to the overall market.
Man, I was completely flat today. I was only down 0.75%.
It looks a whole lot like Apple
0.08%.
did after the iPhone profit bonanza in 07, 08, and something had to happen to convince the market that there was a next phase. And I guess if you're an investor,
Meta, I
saying,
finished the day
if
down
I'm worried about
1.8%.
margins and market share for
It's
Nvidia,
1% of my portfolio.
Isn't it more likely they go down than up over time? And is that okay?
Well, I think from margins and market share, I think the margins probably are going to go down. They've talked about the 75%
call D-Rock is
number,
not
which has
until
been kind of
5.
consistent. But I think the bigger picture here is ultimately this conversation comes down to a leap of faith. That
report should
we're
come
see
out
two
any
groups of
minute,
investors, and
probably
this comes to margins. And my
4:15-ish.
comment is I think margins come down by a little, maybe 1% over the next year, 2 years, but I don't think they come down by much. And ultimately, the question is like, how early are we? This is a similar theme. But if you believe, and I'm in this camp, that we're in probably a third of the way through of the build out and not even
So
at
yeah,
the first
I think
pitch when it comes to the development
there
or
are
the deployment
actually
of AI. I think what we're going to
traders out
see is
there
that the
that
sustainability
are
of Nvidia's business
literally
is,
going to be
much better.
looking
The
tick
street
by
right
tick
now for
credit
next year
spreads,
is at
like while the
44%
earnings
growth.
call
I
comes
suspect
out.
that number is probably better than 60. Now, whether they get credit for that is a question. But to answer the bigger picture question is we're still very early. Nvidia is going to be a clear beneficiary. I don't know if the stock is going to reward investors. We sold the stock a few months ago because we knew things were great, but we just didn't know if that would yield necessarily outperformance.
And then the other thing, obviously, and whatever you believe about all of the equity stakes and the financing deals that Nvidia is doing to try to kind of foster the growth of this whole ecosystem, it does add complexity.
This is fiscal year 2027 too.
On the balance
FYI.
sheet. And yeah, I guess the question will be is whether we can get comfort with that, and if the company can kind of delineate exactly why it all fits together.
All these questions come back to how disruptive do you think AI is going to be? If you think it's going to be as disruptive as the expectations are, then this off-balance sheet financing is a risk. If you think it will be more material, if the impact is going to be greater, I know these are soft conversations, soft kind of themes here, but ultimately, if you think it's more than the market, then it doesn't matter. It doesn't matter where the money's coming from. What matters is the brain of AI is getting substantially bigger. I mean, these 20 gigawatts of data centers are expected to come online next year. I mean, just to put it into perspective of the magnitude of these, one of those data centers will add almost 0.5% to the overall strain on the U.S. grid. One of those data centers.
Gene, we're going to come back to you a little bit later after we get those numbers. But right now, we actually do have to break away. Thanks very much. Anthropic and Salesforce announcing that Claude Force, an expanded partnership between the two companies that will launch Salesforce within Claude. Joining us now to discuss the partnership is our own Jim Cramer, along with Dario Amodei, Anthropic CEO and co-founder, and Mark Benioff, chair and CEO of Salesforce. Jim, take it away.
Gentlemen, couldn't have really a more exciting combination. This is terrific, and I want to thank you both for being with us.
Jim Cramer has the pleasure of interviewing.
We're thrilled to be here.
We're thrilled to be here, Jim.
Thanks for having
Dario.
All right. Well, it's great to have Dario. I've not interviewed before. This is very exciting for me.
We're at the top of Salesforce
It's great to meet you, Jim.
Thank you. And I look forward to talking to you more, maybe next week at Dreamforce. I don't know. I want to start with Mark. Mark, I've been a customer of Salesforce for a long time. All I can tell you is that I always thought I knew how to query Salesforce. Why do I need Anthropic to help me query Salesforce?
Jim, this is really the best of both worlds. This is the #1 AI in the world, Anthropic.
Mark Benioff
and the
and his
#1
boy,
CRM,
Mario,
Salesforce,
from
coming
Claude.
together for the first time in an incredibly powerful
Anthropic
way
are
to
being
build a new
interviewed
product called
on their big-time
Claudeforce.
partnership.
And you're right, Jim. Claudeforce gives you the ability to look at all of your Salesforce data, all of your data systems, all of your applications and what we call our semantic layers, all of our agents as well, and even building incredible new applications on top of this kind of stack. This idea that you can use Claudeforce to not only
We're at the
query your
Claudeforce
systems,
on
but
Kramer
build
stage.
applications dynamically,
So,
it's really a first
yeah,
in the
at this
industry,
point,
Jim.
if they're going
We've
to
never
these
seen
guys,
anything
that
like
means
it.
that
It's
NVIDIA is not going
completely
to
exciting. I
put
think
out
that this is the
earnings
way
until
all
420
enterprise
then,
systems are
because
gonna
it's
run
now
in the future.
417. I think it
All
was
right,
either going to be
Dario,
415 or
I think that
420.
the combination is terrific, but I also know when I go to my Agentforce page, I see OpenAI's there. I don't know how exclusive this is. I don't know what you get out of it. Tell me how this distinguishes you from other LLM models and why this is so exciting for you.
Well, look, our view is that Claude is the best model for integrating complex amounts of information. We've been using Salesforce and Claude within Anthropic. We're huge Salesforce customers, and as you can imagine, the pace of things at Anthropic is incredible, and we have to both manage individual accounts. And we have to answer all these incredible strategic questions that change every time a new model and a new product comes out. And we've found that this combination product that we've built together is the most useful thing in accelerating it. Within Anthropic, for a long time, we've been accelerating the research teams within Claude. But this is the first time that we've really been able to incredibly accelerate our go-to-market efforts within Claude, and we want that for all the other enterprises. And me and Mark want to bring it together to everyone.
Oh, look, we see the numbers. We also see the tape underneath you, Salesforce, fantastic numbers. But I do want to ask you, I know I probably should ask Mark this, but I want to give you, Dario.
15.5%.
There's this whole SaaS apocalypse thing. Of which we thought that you were going to destroy Mark. I know Mark has a big investment in you, but I was waiting for you to put him out of business. What do you think about the SaaS apocalypse thesis?
We're not interested in destroying anyone. We think of this as a very positive sum thing, right? That's the way markets work. We're creating new value here, and the question is just it's not about destroying anyone. It's about how much of these enormous
Mark, thanks
gains
for
go to various people
chat.
and various companies.
I think
and
that's
our philosophy always has been
I guess that means I can go on a bathroom break, right?
Empower
because we have a
our
moment.
customers to share these gains with us. And so
We'll be
we've
back.
already
Don't
worked
leave,
with
Mark.
Salesforce in a number of ways. We're big users of Salesforce. Salesforce is big users of Claude Code, of CoWork, of other tools. We've put products like Claude Tag in Slack already, which is a part of Salesforce. And now this combination is a way to gain something that's, it's 1 + 1 = 3, something that's bigger than the sum of its parts. And I think that's the right way to think about things.
Jim, I think another point you really have to add to that, which is that, number one, this isn't our first product. With Anthropic, we've got several products with them that we're so excited that we've built, including Slack Code. But, Jim, you have to think of it like this. Salesforce is very much a deterministic system. It's a system that is all about security and rules and governance and workflows, and if this happens, that happens. It's about determinism. And now you have this incredible probabilistic system, these large language models, this incredible technology that Dario has built. It's non-deterministic. But when you put these two things together, the idea that you could have a probabilistic LLM and AI that's working now perfectly with a deterministic system like Salesforce,
I'm back.
the result is incredible. We would never have seen this kind of power, and our customers are going to build these amazing new applications dynamically. That is what is so exciting for us.
All right, we want to be sure everyone always worried now these days, Mark, about is your data safe? You've got a terrific partnership. I just want to be some surety that when you do this kind of thing, anyone who has Salesforce and uses Salesforce knows its data is safe with this agreement.
Hold on one moment.
We've put
Hey, what's up? Hi. Yes. No, it's existing. It's like spot pricing where they would be. I don't have new crop pricing just yet. So sometimes as early as December, I should have it sometime. Yeah, we don't ship new crop till like Jan, Feb. Yeah, sometimes they do. It depends. But each year is a little different. You know, I have contracted like late November, but usually I don't contract till like December on that stuff. Yeah. Yeah, because it's early, I'm not getting a lot of information, but I can call Garrett and try to see if they can give me anything more than what like a Strata gives. I think that 685 is kind of where they think the market should open on that. Yeah, yeah. 685. Medium pieces, yeah, medium pieces, I'm not sure. I don't think it's as high as 685 though. I think it's probably 50 cents lower. Yeah, dollar or 50 cents. Yep. Yeah. Give them a call. Yeah, I'll give them a call for sure. Yeah. Okay. I will. Okay. Yeah. hmm hmm Yeah. Yeah. Something bigger than a 2730, you're saying? Okay. Because 2325, I don't have. I might. Yeah, I could have. Okay. 2527, I think I have. Yeah. Sure. Yeah. Okay. Yeah. Okay. For quarter four, right? For quarter four. Q1. hmm hmm Okay. Very good. All right. Yep. Okay. Sounds good. All right. Thank you. Okay. Bye. Whew. Sorry about that. My bad. I do see Nvidia came out. Can you guys hear me? I hope you can. So I do see 108 billion. Sorry, my best customer called me, and I had to pick it up. So my bad. You never win, huh? So I see on CNBC we're back to
so customers have put hundreds of
Mark
billions
Benioff.
of dollars into Salesforce.
So I guess the
there's
news
a
on
huge amount
Nvidia
of
isn't
value
that
could be unleashed
groundbreaking.
through this combination.
I do see revenue
Okay, and now we
beat.
do know your numbers have come out.
And
I did not
let's
know
try to
how
find
close
the
you were.
the
Dario, you
numbers.
guys are both from San Francisco.
Okay,
Probably
let's
know
go
each
to Wall
other.
Street
I
Engine.
don't
I
know,
like
maybe
them
most
the
of your
best.
lives. But Mark, I think you have a big position, Salesforce Ventures.
Revenue came in at 96.2 billion.
Anthropic.
That is
I
a
mean,
victory.
I don't know. When
That
looking at your
is
earnings
a
per share
victory.
numbers, I have to
Okay.
believe that maybe
Anything
it's
above 95
conceivably
billion
worth, say,
is
30,
worth
$40 billion.
celebrating. I don't care what the stock price does.
Well,
Okay,
I don't
let's
know
try
what
to look at
Dario's
Q3
valuation is. I
revenue
think it goes
guide
up every single
108.
day.
Yeah, I would have
But
liked even
I
higher, but I'll
am
take
very fortunate
108
that we
for
did
sure.
make a large a
The
large
gross
investment
margin
in Anthropic.
guiding
We
at
believe
74
so
is,
strongly
we
in this
want to see
company, and you're
75, but
right,
I can
it
live with
is probably
74.
consequential.
And let's
I
see,
think when you
data
look at
center
some of the great
89.
assets
Remember
at
we talked
Salesforce,
about,
it's amazing.
we would want to
Slack,
see
of
over
course, is a huge asset
85,
of Salesforce, but
crushing
so
data
is our
center.
Anthropic investment.
This is
Oh, yeah, we
huge
also have our
news,
cash
huge
flow,
news.
and
You
I'm sure
remember
you've seen our
this time
cash flow
last
and
year they were
revenue
doing like
numbers are actually
47
quite
bill.
good,
Now
Jim.
they're doing
So we're very
96
excited
billion.
about
That's a
all the
5.2
combinations
trillion
of how,
market cap company.
Salesforce is adding up. And it's
Looking at
positioned today.
106% year over
At
year.
all, Mark. And Dario, look, it was great
Like
to
I
talk
said,
to you.
I'm
I
not
mean, I hope to
interested
meet
in
you when we go out
EPS
to
right now.
Dreamforce.
I'll
You're
tell you
a
about
delightful
why
person whom I've
another
always
time.
wanted to talk to. I'm
Okay,
willing to put
so
up with
let's see if
my
we can find
joint
anything
interview. I
here.
hope
Free
to see
cash
you
flow,
soon.
21.3 billion. I don't have anything to compare that
fantastic to
with.
meet you, Jim.
So
Dario,
we'll have to do
and
that
Mark, I'll see you for your
research a
earnings
little
in
bit later.
moment. And I think the stock being up as much as it is.
I see that
I forget.
they have
Zombie SaaS? I
they
don't know. Maybe
have,
you can help me with that term later on. Thank you,
That
guys.
wasn't my first.
It looks like remaining authorization
Jim, but you know what?
99.0
We're gonna
billion.
talk
So I
about
don't
why
know if they
that's nonsense.
increased the
Also, Jim, we're going to
buybacks.
talk about all the great quarter results
The
on
outlook
Mad
assumes
Money.
no
Look forward to
data
seeing you
center
there.
compute revenue from
Thank you,
China.
gentlemen. Thank you very much.
Main comments are AI has reached
All right,
its
well, let's,
inflection
Jim,
point.
thank
It's
you
doing
very
useful
much.
work.
Thanks to Mark and Dario, of course, as
Its
well. Let's get back to
tokens
Christina
are productive
Parsinellis
and
with more
profitable.
on
Now
NVIDIA.
compute is revenue. The AI infrastructure build out is at full steam. Vera Rubin now in full production was built
because they want to show
to
that they are
power
diverting
this
away from
exact
the
moment.
hyperscalers, not as reliant.
Let's see if we can
Specifically
go
for
to the
hyperscalers
actual
group, It
earnings.
did actually more than double, so there's still a lot of strength
What
there.
the heck is
Another
this?
part that really stood
I
out
don't want to do that.
to us right now is that they've partnered, and this is a quote from the CFO
And the earnings call
commentary,
should be
they've
at 5
partnered
p.m.
with extensive network of
Okay, I
suppliers to
don't
secure the
have
critical components needed to meet demand for the next several quarters.
2027
Our commitments
Q2
increased
yet.
from 119 billion last quarter
Month over
to
month, huge increase
279
in
billion right now,
revenue as well.
primarily related to the procurement of memory. This is a strength of Nvidia. If you argue, okay, OpenAI is coming out with a jalapeno pepper and all these other chips are
I'm
coming
happy.
out great. You can
I don't know
build
if you
these
guys
chips,
are
but can
happy.
you
I know
actually
the stock is
procure
down
all the
slightly,
components that go in it?
but I don't think
Nvidia
that's a
is showing
big deal.
its dominance, its
I don't think
TSMC's
there's
number
really
one
any
customer
major negative
outpacing
news
Apple. In this
other
case,
than
it's showing
maybe
that it's
gross
procured all the
margin
memory out
guide
there
looked
when
a
everybody's
little
complaining
off.
about
I'll
how
have to pick
expensive
this
and
up again.
how
Sorry.
difficult it is to get. So this is an
Hey, sorry, I was in a meeting. Yeah, I just told him to hold. It's fine. Yeah. Yeah. What is that price show? Yeah. 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 Well, they're not quoting the same item. They're quoting a raw export fancy junior without a package. So like we have to put it in the case and then we have to pasteurize it. So when you add those up, that's why it looks always higher than the strata. Mm-hmm. Mm-hmm. Yeah. Put Yeah. Yeah, it's probably around the same. Meaning it's about a dollar per pound less than 685. I will talk to him. I'll let him know, but that's the answer he always gives me. That's based off of, raw export market that it is not graded properly. It's not treated. It's not packaged. That's like shipping containers to export. It's just a raw item. That's why there's such a big price difference always. But yeah, maybe the 685 is too high. And another thing I'm thinking is, full truck volume with the pricing be a little less too than 685. So, and also they could be higher than everybody in the market right now because they're out of inventory before new crop. They're probably trying to slow down sales. Yeah, like I'll sell like a spot LTL, but I think they really firm up pricing this time of year to kind of slow down sales, make sure they have people covered like yourself, the contractor. So that might be something they do too. Yep. Yep. Yeah, no, I get it too. Yeah. Yeah. Okay. I will. Yep. Okay, bye. Hey, I don't know if you guys can hear me. Hopefully you can. I had to take that call again. Yeah, I agree, Mark, if you can hear me. Yeah, 74% is okay, and a stock little down after hours, no biggie. Yeah, for sure. For sure. If anything, I would imagine that the stock definitely will move during the earnings call. But I mean, look at the volume we've had in the last few days since Monday. I mean, we didn't know if the market wasn't moving because we were all waiting for PCE today and then Nvidia earnings tonight and then Jackson Hole on Friday. But it really does seem like this is a week that a lot of investors aren't around. There's just no trading volume that I can see. We had that big move when Basent discussed bond buybacks, and we had the big move in gold and silver and in Bitcoin. But really, the market has been very slow, and I really think it's seasonal this time a year. I think people really, really try to get in their last-minute vacations, and that's just my opinion. I could be wrong. All right, let's see what else I'm missing here on Nvidia, and hopefully you guys can hear me. Okay, Anastasia gave me a thumbs up, but I don't know if that means you can hear me or not. All right. Okay. Nvidia says China Hopper shipments were less than 1% of Q2 data center revenue. Okay. Nvidia sees adjusted Q3 margins 73.5% to 74.5%. That's a reason for the stock to get hit. They'll find anything that they don't like to hear on margins for sure. G. Munster says Nvidia is slightly down on gross margin guide of 74% in October. Street was at 74.8%. Otherwise, numbers look great. Completely agree. Thanks, Mark. Thanks, buddy. Otherwise, the numbers look great. They reported revenue growth of 106%. We know that. We went over that. Guide was a similar upside. Definitely. Here are some comments. So I'm assuming that, what is this? Okay, so this is the AI investor saying, here's NVIDIA's second quarter fiscal 2027 results. Of course, I would love to go on here and click on it so we can see the press release, but it's not working. Who would have, oh, it's working. Here's the press release, guys. We're going over revenue. We're going over AI has reached its inflection point. We know that the main quotes that I already discussed here. The AI infrastructure build out is at full steam. Vera Rubin now in full production was built to power exactly this moment. They returned approximately $26 billion to shareholders in the form of dividends and buybacks. At the end of the second quarter, the company had approximately $99 billion remaining under its share repurchase authorization. Okay. Let's see if we can find anything new in here. Announced the highlights are under the data center. We can go over that briefly. Second quarter revenue was $89.0 billion, up 18% from the previous quarter, up 117% from a year ago. Announced Nvidia, that's just in data center, $89 billion. That's unbelievable. They announced the Nvidia Vera Rubin platform is ramping into full production with racks, and they have all their partners with the Neo Clouds, Oracle Cloud, and Google Cloud, Microsoft Azure. They released something called Nvidia Spectrum 6 switch systems, and they unveiled Nvidia Vera, which is their first CPU built for AI agents. And they also announced their TPU, NVIDIA Grok 3 LPX, the interactive AI inference accelerator, which is now in full production. They also introduced new security innovations for NVIDIA Vera Bluefield, delivering agentic AI storage processing within silicon security for AI factories. Launched the NVIDIA DSX platform, providing infrastructure builders a complete playbook to design and build and operate AI factories at scale. We already know about the $500 billion third-party capital thing that they announced. They announced that SpaceX will deploy NVIDIA Vera CPUs. I think we knew that already. We knew about SB Energy, their partnership there, which I believe is the OpenAI data center that's being built in Ohio. They revealed that NVIDIA Blackwell led across every category in MLPerf training 6.0 benchmarks. They announced new software, open source models, and partnerships with the world's leading software platform providers to build autonomous AI agents for industries and enterprises. And they launched NVIDIA BioNeMo, an agent toolkit, which provides skills for agentic sciences era. Agentic life sciences era. They formed the Open Secure AI Alliance with industry leaders. We know that. That was the first tweet I think he ever did on X. They revealed NVIDIA GPUs with confidential computing are now used for confidential inference in Apple's private cloud compute. This is all old news here. We know that they expanded Korea's AI factory. They announced a multi-year partnership with SK Hynix. They partnered with the Japan government. We knew that too. And they said they revealed that Japan's leading enterprises, startups, and research institutions are building industry-specialized AI models with NVIDIA Nemotron open models. And we're not going to go through edge computing, are we? Because a lot of this is just the same old, all the news they just put into recapping of all the announcements they made. Nothing on Perplexity, nothing about Poolside that I read in here. Probably a little new. We can try to find, I guess, any footnotes on accounts receivables, which Michael Burry probably already looked at. Let's see here. Yeah. So overall, I mean, pretty good. Let's see what the stock's doing. The stock's only down less than 1%. So, I would claim that's a victory for us, long-term investors. So I will play the earnings call at some point whenever it comes on. And let's see, here is a photo, which is fiscal.ai, showing you just the amount of revenue that this company is now making in sales. And the reason we don't look at GAAP net income is because, Nvidia has become a venture capital investor. They're one of the largest holding companies now in a lot of different industries, right? And then they therefore lock you in with the chips, and that's the whole circular funding story that obviously makes sense. Let's look at IGV just to see what software is doing overall. We can look at Palantir just to see, based on a lot of the software stocks that came out today. IGV is up 3% after hours. That's crazy. We can see if Palantir or AppLovin are moving on the news that we got from Salesforce, Okta, CrowdStrike. Palantir's green. Let's see if AppLovin wants to play along. I didn't even look at AppLovin today. All major holdings in the Rigatoni Capital Holdings portfolio. AppLovin's up 1% right now. And, I didn't even know. I'm assuming we ended down for the day. The NASDAQ 100 is actually green. That's because we had some good software earnings, right? Microsoft's probably up on the news. If Salesforce is still up or not, that's another story. I definitely wouldn't be surprised if it fades. It's actually up even more, 13.35%. Let's see how Microsoft is reacting. Microsoft is up slightly. So pretty good news. I'm going to look at Meta just because Meta's down. Okay. It's because I bought it today. And, I really don't make a lot of moves, right? It's very rare for me to make a lot of moves. I just thought that Meta was buy down where it was. But it does not clear, the settlement story, the lawsuit that they settled for teenagers. I mean, that doesn't fix the compute CapEx story for them. They still are spending like drunken sailors, so that doesn't help that story, but it's one less thing that we can put off the board for Meta. It's one less thing that a long-term investor has to think about. And that's why I bought it, and yeah, so I think we got pretty much everything we needed to get before the earnings call starts. Does anybody know when the earnings call starts? I think it's at 5 p.m., correct? So we will play that here. We will play that here. Yeah, 5 p.m. is when it starts. We'd like to have it on. Like, can't we sit in the room and chill and wait? How do we do that? How do we sit in the room and chill and wait? Does anybody know? Nvidia took a $400 million H200 charge in H1 as demand diminished, citing excess inventory and purchase obligations. Nothing new on the over the wire right now. Everybody just waits for the earnings call. So yeah, just a reminder on Meta. We can talk about that while we wait. We got Meta agreed to $18 billion in teen safety settlement. They're going to implement time limits for teenagers. So it's going to be a 2-hour daily limit and some parent approval stuff. And, you can block, maybe you can do a nighttime block. Some other feed and safety upgrades. They're going to pay $12.7 billion to states, and looks like TikTok and YouTube are also agreeing to pay as well. If TikTok and YouTube join, why would they join? Meta's default teen time limit drops from 2 hours to 1 hour per day. It makes no sense. Meta will record a $10 billion legal expense in Q3 2026 while keeping its July guidance unchanged.
Especially when it comes to your investing strategy. Discover Cboe, the exchange that pioneered options trading with versatile trading products.
Play lobby music? Yeah,
data.
let's do it.
Cboe gives you the tools to trade.
Why wouldn't we
in
play
any
lobby
market
music?
environment.
That's the best part.
Life is better with options. Your investments could be too.
Make the bed shake.
That's the lobby music. That kind of isn't so good, is it? Well, we got about 12 minutes, guys. Live playback has been stopped. Yeah, let's go back to. Rather listen to CNBC, to be honest with you.
Like booking a jet with Badget.
While
it's
we
all
wait.
about timing. I'd say they're both about control. Timing, control. Timing, control. Timing, control. Timing.
It's all about timing, with jets at the right place and the right time. And control, because you can choose from
Nvidia's almost back to green, guys.
Book
It's
a
only
jet
down
with
0.3%.
In the U.S., there's a break-in every 26 seconds. Simply Safe does more than just alert. We stop crime before it starts.
Stop. This is Simply Safe. You're being monitored and recorded. I'm requesting police dispatch.
Using
D-Rock
AI
said,
alerts,
sorry to keep you waiting,
US-based
folks.
live
Complicated
agents help
business.
deter break-ins.
Yeah.
Simply Safe. No long-term contracts. Monitoring
Gotta
and
pick up
deterrence plans
the
starting
phone when
around
your
$1 a day.
bestest customer calls.
Today's
Unfortunately.
industries are evolving fast. Comcast Business keeps you in step with secure AI-backed networking in over 100 countries and thousands of experts answering your call at 2 a.m. like it's 2 p.m. Powering over 90% of the Fortune 500 and millions of small businesses, just like hers. When you add it all up, no one does business like Comcast Business.
Wherever news and ideas meet, wherever earnings reports and saved orders intersect, the all-new Fidelity Trader Plus is there.
Video wants to turn green, guys.
Giving you the freedom to trade how you want.
Let's see.
With your preferred tools.
Let's see. We got
customized
some.
charts,
Who's buying a
and
$5.2
streaming
trillion
data.
market cap
So
company
you can
right
start
now?
a trade idea on one device
When the market's closed. Who are these people?
and execute it on another. Meet our most powerful, consistent trading platform yet. Meet Fidelity Trader Plus.
It has been a busy hour of earnings with Nvidia moving lower, but actually firming toward the flat line. Okta and Salesforce Those shares up double digits. So what did we learn from those results? What's next for the markets? Joining me now is Paul Hickey
we got,
from Bespoke Investment Group. So, Paul, it's fascinating. We've
info
established
here
that
for
Nvidia
you.
has not really
And
been a
it looks
broad
like,
market bellwether or directional tell for a little
we got
while
our first
now.
official report from Zero Hedge, so maybe we can read that and find something new that we missed.
Going to try to do anyway.
And
so we do have Jackson
yeah, the
Hole on
jalapeno
Friday.
OpenAI thing that came out yesterday, that news that it's a better
That's kinda
chip and
cooled
that
off
it's
a little bit
fast,
too.
according to
Yeah,
Sam
and,
Altman.
Jackson Hole would make a big deal
Obviously
of
can
it.
hit
And
the
if you look
stock,
back
but
in
remember
history,
that
there's a
isn't that
couple
more
of
of
them
an
that were a
ASIC?
big market impact, but most of them are non-events. So I think
know.
we'll be all
You know,
hyped up
you would
looking
think
at that
that's
on
more for
Friday, and then by
inference. But anyway, let's
I would
move
bet
on.
that by
We
Friday
got
afternoon we'll be on
revenue
to the
guidance
weekend.
had beat
Yeah,
and street
moving.
consensus
But I
by
think with
an
the market
average of
as a whole, just
4%
looking
over
at
the
the
past 4
entire market
quarters.
structure, because
And the
earnings
stock
season
is traded
behind
down
us right
3
now.
to 5%
We've
every
seen
single time.
volatility
So we
low,
didn't
but
have,
the
we're
dispersion
not
within
having that
the
right
index,
now.
what's called the CBO.
So this is
dispersion
different.
index.
This
It
is
hit
a
one
trend
of its
breaker.
highest
You know, we're
levels
still
ever,
a quarter of
right
a percent
before the
down
end of-
right
at the
now.
end of July. Only
And,
higher during the depths of the COVID crash.
It
But since
says
then, it's come
that-
in a lot.
Yeah.
And when you've seen these prior
what
declines
Nvidia
of this
did, we already
magnitude,
talked
and
about
it's
that.
a small sample size. It's 4 other periods where
I
we've seen
do
a
see that
similarly
operating
large move.
income
The most recent
was
was right after the tariff
63.9
tantrum,
billion,
last year. Market
beating the
performance,
estimate of
it's a small sample size, but uniformly
61.9
positive
billion.
over the next 1, 3, 6, and 12
R&D
months.
expenses did
so
come
I think
up.
in that respect, it's a
Did come
positive.
a little,
The overall economy is doing well.
higher.
You've seen housing's not great, but
not by a
the
lot.
labor market's
7.05 billion versus
manufacturing's
estimate 7
accelerating.
billion.
So I think in that respect, I think the
And
market can continue to go
let's
higher. You talk
see,
about the volatility in August and going into
Edge
year-end, but
computing
it's more
revenue
likely that the
was
S&P
7.2
500
billion,
trades
beating
has a
estimates
10%
of
gain between
6.1
now and
billion.
year-end, then even
I'm trying to
experiences
look
a
for
drawdown of
gaming.
1%.
Yeah, I would just note, I did look at that
I see
study you
compute
did
and
about when
networking revenue.
Comes in this
That's
way.
the
You pretty much
data
had
center
some kind of
revenues
a stiff
89
pullback
billion.
before those other episodes.
Hyperscale revenue.
In some areas of the
that's
market,
not
we
what
did
I
have a
want
stiff
here.
pullback in July in the semis and the AI
Okay, well,
trade. So
revenue
a big
numbers were
pullback in some of those
impressive.
areas. But yes, it
Don't
was not
forget
nearly the magnitude
the
of the
circular
pullback that we saw in
financing.
some of those
Almost
other
half the
periods.
company's
Although
record
in
96
2018 and
billion in
2019, those
revenue,
weren't
or
monster
40.3
pullbacks.
billion,
weren't.
came from
They got a
hyperscaler
little
customers who
interesting for a
can't fund
while.
their
They had
own
some
build out
volatility. We'll see how it
without
Interesting's always
outside
good.
capital.
Well, for us, for sure, Paul.
And
thank you.
without
Good to see you.
Nvidia
Thanks
handing
for
them
you.
cash to buy its own
Retail earnings take
products. We
center
have
stage
extensively
tomorrow as well.
reported Nvidia
All
sells the
names you need
chips
to
and
keep an eye on are up
simultaneously
next. Closing
guarantees the
overtime.
leases and invests in the
Nasdaq
builders so the
market
orders
right
keep
back.
coming, helping create a massive $3 trillion off-balance sheet funding hold. That's not Nvidia, that's all the hyperscalers together, right? Two of the companies which are supposed to generate revenue in the AI ecosystem, which are both OpenAI and Anthropic, both lost gobs of money last year. Both are heading to IPO to raise more cash to keep buying. We're pretty sure Anthropic is profitable, right? OpenAI is or not.
Do you know where your money
Okay,
goes
so the only
each month?
problem is that Bear Rubin needs massive amounts of memory at a time when memory
follow
prices,
the
unlike a year
flow
ago,
of
are
your
about
finances with Monarch.
absolute
All your money,
stratospheric.
one clear view,
Which brings us to the next point. Nvidia's forecasting a margin between 73.5% and 74.5% versus analyst estimates of about 75% and estimates as high as 76.5%. Needless to say, that won't help worries about increasing component costs, especially after the company is raising prices on many of its customers.
And it's time to replace it. But why struggle with the
To be
lengthy
sure,
shower
there
remodel
is
when
a
Jacuzzi
growing
can do it in
focus on
just one
Nvidia's
day?
gross margin,
And there's
which
no
is
need
where
to break a
competition is
sweat
starting to
or your
manifest in the
budget.
form of
Right
more
now,
aggressive
we're waiving
pricing
all
cuts. Recall that
installation
Nvidia
costs,
is
plus offering zero interest and zero
recently
payments
told
for up to
customers
1
prices are
year.
going up
So you can
because
finally
of
convert your
costs.
old bath to a
So the
safer,
questions
easy
about
entry
whether it
shower
can maintain the
complete with a custom
75%
sink,
margin
grab
level,
bars, and
its
slip
guide,
resistant floor
its
installed
guide,
in
it will
one day.
My overall
will
experience
continue.
with Jacuzzi has been wonderful. Everything was customized to the way I wanted
Nvidia's
it for the
future
price
supply
that I
commitments
wanted.
have more than doubled in a
great
single
experience
quarter,
from start to finish.
jumping to 279 billion from 119 billion.
Give Jacuzzi Bath Remodel a call.
Nvidia says the increase is primarily related to securing memory.
Installation costs and offering
To securing memory. These aren't costs already incurred, but commitments to suppliers to lock in the components and capacity needed to meet AI demand over the next several years. Nvidia has $92 $92 billion committed for the rest of the fiscal year,
I look at everything
and
as
$87 billion
study it all
for
the
full year
time. My viewers
2028,
are my
and
bosses. They come
$88
to
billion
my
for
show
full
and
year
learn how to do
2029.
stocks.
Mad Money, weeknight 6 Eastern, CNBC, and streaming on CNBC Plus.
And while most concerns focus on the income and cash flow statement,
Commissioner, are you going to apologize
according to Vital
to all
Knowledge,
the
this is
local
going to be
police
the most
officers at
talked about
today's
part of
parade
the
for
Nvidia
calling them
report. The
all
accounts
Nazis?
receivable was $63.1 billion with 60
Did you
days
not
sales
compare local
outstanding,
police to Nazis
up from
once upon
45
a time,
days
sir?
sequentially due to extended
say
payment
no.
terms on large multi-quarter agreements with certain investment
Commissioner
grade
Harvey,
customers.
you could say
So
no.
that definitely
Or did you
went up
call
from
police in Bucks County Nazis?
that definitely went up. So again, accounts receivables was $63.1 billion with 60 days outstanding, up from 45 days sequentially due to extended payment terms and large multi-quarter agreements with certain investment-grade customers. It appears that we may not even get to the off-balance sheet bubble discussed overnight. Net working capital alone is starting to be a huge issue for the company and its clients. There'll probably be some questions on China. Of course, I would expect that, right?
One more check on some of this hour's big earnings reports. Nvidia down slightly, just about 0.25% after hours, despite strong results.
I think the rumor that Nvidia was coming up with some custom chip for China was fake news. I think Nvidia came out
We are not comparing
and
the
noted
earnings
that
number
the other
to
day.
Forecast because it includes a gain from tariff refunds that could also be affecting its fourth quarter guidance. Revenue of $15.7 billion was
And then,
better than expected.
Zero Hedge goes
It'll be
into
another big day of
OpenAI,
retail
said its new
earnings.
jalapeno
Best Buy
processor
tomorrow,
outperformed
Dollar
Blackwell
Tree, Dollar
systems in
General,
2 areas
Burlington
of its
Stores,
tests.
and Hormel all report below the bell. And then after the bell, we'll break down results from Gap, Ulta
That's all we
Beauty,
got from
Affirm,
these guys
Marvell, and
at the moment.
Autodesk. Lot to do.
Okay, it's
That does it for
4:57. Let's get
Overtime.
to the
Nvidia
earnings
conference
call.
call starting any minute. Fast Money starts now.
Go, 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 go.
Nuveen invests with the foresight and vision that come from navigating more than 125 years of market cycles. Unlocking the potential of public and private markets, spanning real estate to private credit.
So, if you guys are in here, if you don't mind dropping a comment and telling me if the music or the volume's too loud or too low. What would be cool is if we could see a live webcast, but we can't, right? This isn't Palantir. We can't see Jensen Wong. Nvidia has turned green, friends and family. Nvidia has turned green. I repeat, Nvidia has turned green. Nvidia is now up 0.5%.
Good afternoon. My name is Tiffany, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's second quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you.
Nvidia is
Toshiya
turning red.
Hari,
I repeat,
you may begin your
Nvidia is
conference.
turning red.
Thank you. Good afternoon and welcome to NVIDIA's conference call for the second quarter of fiscal 2027. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2027. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 26, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Toshiya. We delivered another outstanding quarter with record revenue, operating income, and EPS. Total revenue of $96 billion, more than doubled year over year as growth accelerated for the fourth consecutive quarter. The surge in AI demand is driving a global infrastructure build-out, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We expect to grow revenue by approximately 70% in fiscal 2028. This is a supply-constrained outlook. Q2 data center revenue increased 18% quarter over quarter to $89 billion, with strong contributions from both sub-segments, hyperscale and ACI&E, which includes our neocloud, industrial, and enterprise customers. Hyperscale revenue of $49 billion grew 13% sequentially, driven by sustained strength in Blackwell, reinforcing that more compute drives more revenue. As new GPU capacity comes online, our hyperscale customers delivered strong financial results in the quarter with accelerating revenue growth and expanding margins. With cloud industry backlog now greater than $2 trillion, CapEx by the top 5 hyperscalers is expected to reach nearly $800 billion in 2026 and $1.3 trillion in 2027. Today, we are delighted to announce an expansion of our partnership with AWS. Building on its already vast installed base of NVIDIA compute, AWS is deploying an additional 2 million GPUs starting this quarter through the second quarter of fiscal 2029, along with Vera CPUs, some integrated with Rubin, others standalone. AWS will serve NVIDIA Nematron family of open models on Amazon Bedrock and SageMaker. Amazon will also adopt our full physical AI stack, Omniverse, Cosmos, Isaac, and Jetson, to power its fleet of warehouse robots. ACI&E revenue of $40 billion increased 25% sequentially and 138% year over year. Growth was driven by neocloud capacity additions to meet the rising demand from enterprises, AI startups, and sovereigns, as well as hyperscalers purchasing capacity to supplement their own buildouts. Using NVIDIA DSX reference designs, our neocloud partners are bringing capacity online faster and at lower token cost. They are expected to exit the year with 8 gigawatts in total installed capacity, up from approximately 3 gigawatts at the end of 2025. Incredibly, we are seeing demand acceleration even at our scale. Customers' forecasts point to our growth doubling next year. However, as I mentioned earlier, we expect to grow approximately 70% as we are supply constrained. Nvidia Compute is fully utilized across every cloud we serve. The economic value it generates for our hyperscale, neocloud, and AI lab partners keeps rising. Besides building the best AI computing technologies and the most capable supply chain, Nvidia has 3 unique capabilities that are engines powering our growth. First, Nvidia's architecture runs every model, and we're growing share as closed and open model adoption grow. Closed and open models alike, adoption is skyrocketing. Nvidia runs the leading closed models, OpenAI, Anthropic, Grok, Meta, Gemini, and the leading open models, TML, Mistral, Quinn, Kimi, GLM, DeepSeek, Minimax, and Nematron. We're great at small models and giant ones, large or video, auto, regressive, or diffusion, in the cloud or in the edge. Nvidia is great at training, great at inference, great at agentic workloads. One platform, fungible for every model and workload, durable for the entire lifecycle of AI. That combination of performance, fungibility, and durability is what makes Nvidia the productive and financeable compute infrastructure. Our second unique capability is our full stack AI factory platform that is expanding our share of the data center TAM. Since Hopper, our revenue opportunity has grown from roughly $18 billion per gigawatt to $25 billion with Blackwell, to $40 billion. With Vera Rubin, which now spans Vera CPU, Rubin GPU, NVLink, InfiniBand Ethernet, and Grok LPU, announced earlier this week. Our ability to extreme code design across GPU, CPU, NVLink scale-up networking, scale-out networking, systems, algorithms, and software enables us to deliver X-factor performance gain every generation. Vera Rubin exemplifies this, delivering 30x higher throughput per megawatt and 35x lower token cost relative to Grace Blackwell Ultra. We commenced production shipments of Vera Rubin earlier this month, having already received purchase orders from every major hyperscaler, AI cloud, and system OEM. We expect Vera Rubin to mark
nothing
the
in these scripted remarks would be a reason for the stock to move up 4.6%.
Our networking
that
business
I know of.
had
If you
another
guys know
record
something I
quarter
don't know,
with
let me
revenue
know.
growing
But
18%
that doesn't make any sense.
on a sequential basis. Spectrum X Ethernet, which grew 2.6x on a year-over-year basis, is already helping us become the largest and fastest growing network company in the world. Rising adoption of agentic AI is driving an acceleration in demand for data center CPUs. Our Grace CPU, introduced in 2021, has been a great success, with revenue on a trailing 12-month basis exceeding $5 billion. Today, we are in full production of our next generation Vera CPU.
They said that NVIDIA's CFO says the company's neocloud partners are expected to exit the year with 8 gigawatts in total installed capacity. It's the only thing I can see.
1.8x faster on the spec benchmark and provides 5 times the bandwidth per watt than any other data center CPU. We expect Vera to be deployed by every major hyperscaler,
Okay, I do see some AWS
neocloud, AI
stuff.
lab,
I must have missed
and
that.
system OEM, with
I'm
shipments
going to pay attention
already
now.
underway to our lead partners, including OCI, SpaceX AI, and starting this quarter, AWS. We continue to see demand for approximately $20 billion in total server CPUs.
Says AWS will.
And based on our customer demand and improving supply outlook,
Nvidia CFO
our
says the company and
preliminary
Amazon Web
expectation
Services will
is
deploy
for
2
CPU
million
revenue
additional
to more than
Nvidia
double
GPUs across
in
AWS's
fiscal
global
28,
infrastructure
positioning
in the year
us as one of the
2027,
world's
2028,
leading
and will build
server
data centers
CPU
for the U.S.
suppliers.
government that include 100,000 GPUs
Since
on
the
secure
announcement
AWS
of our
infrastructure.
Grok partnership
That's
last
why the
year,
stock's up
we've been
quite a
working
bit.
to unite NVIDIA's high throughput and Grok's high interactivity architectures. At Hot Chips earlier this week, we announced that Grok 3 LPX, our first rack-scale LPU system, is in full production and already setting records, demonstrating nearly 4x the number of tokens per second against the next best alternative on our artificial analysis benchmark. We expect to ship Grok 3 LPX in volume later this quarter to early adopters. Nebius will be the first. Today, we're not just selling the best chips, we're selling a full stack AI factory platform, offering superior economics for customers and capturing a bigger share of the data center TAM. Our third unique capability is the combination of our full stack AI factory and rich CUDA ecosystem, allowing us to extend AI into markets a single chip alone can never reach. Beyond the hyperscalers lies a massive market anxious to adopt AI. Customers with no interest in designing their own custom silicon. NVIDIA's fully proven
Amazon
full-stack
wasn't up that
platform
much.
is uniquely suited to help sovereigns, neoclouds, and enterprises build their AI infrastructure, bring it to full operation, continuously optimize it through CUDA software, and connect it to offtake demand from our vast developer ecosystem. Hyperscalers will remain a major growth driver, but non-hyperscaler growth, our AIC and E segment, spanning sovereign, regional neoclouds, enterprise, edge, and air-gapped data centers, will represent roughly half of our data center business. Our AI native startup ecosystem, developed and running primarily on the NVIDIA compute platform, is scaling at a rapid pace. Global VC funding in AI, roughly 70% of which is spent on compute, exceeded $400 billion in the first half of 2026, surpassing the $265 billion raised in all of 2025. Nearly 20 companies, including Cursor, owned by SpaceX, Figma, and Together AI, now exceed $1 billion in annualized run rate revenue, up from 13 companies in Q4 of last year, with vertical enterprise software logging the fastest growth. In enterprise, on a trailing 12-month basis, on-prem revenue in the automotive vertical reached $8 billion, while financial services, manufacturing, and healthcare combined contributed $7 billion in revenue. Hudson River Trading and Jane Street are leveraging NVIDIA's powered AI factories to accelerate quantitative trading. Samsung Electronics is using NVIDIA Cullitho to achieve up to 20x greater performance in computational lithography, while Bristol-Myers Squibb is investing in Vera Rubin AI Factory, a fast follow to the Roche and Lilly buildouts, as drug R&D timelines compress from years to months. In sovereign AI, our business, primarily through the regional neoclouds, grew 35% sequentially and more than tripled year over year in Q2. A country or region can allocate land and power directly to a regional cloud partner in ways it never would to a foreign hyperscaler. We don't own a cloud ourselves. We are a neutral partner to every sovereign and neo cloud. And because NVIDIA compute is productive, fungible, rentable, and durable, regional cloud interest is surging around the world. We helped CoreWeave, Nebius, and Nscale build entire infrastructure businesses, and neoclouds are emerging everywhere. Firebird in Armenia, Kasava Technologies across Africa, GMI Cloud in Taiwan, Yoda and NASA in India, Firmus in Australia, YTL AI Cloud in Malaysia, pairing local land, power, and operating expertise with our platform.
Looks like I have technical difficulties.
And create reoccurring usage-linked revenue stream alongside our core platform revenue, with the potential to drive billions in revenue over the medium to long term. Together, NVIDIA's three unique capabilities: a platform that runs every model, a full stack AI factory platform capturing more of the data center TAM, and a CUDA ecosystem that extends AI into markets no single chip could reach alone, reinforce one another, and are the engines of our growth. Let me update you on our progress with our Frontier AI Labs. The Frontier AI Labs have extraordinary demand for training and inference compute, but they are growing faster than what their balance sheets and credit profiles can support. They have rapidly growing customer demand, yet still lack the decades-long infrastructure contracts and investment-grade financing capacity needed to secure the AI factory infrastructure independently. In other words, their growth isn't limited by their technology or customer demand. It's limited by compute. For these companies, more compute means more intelligence, more users, and more revenue. NVIDIA is needed to help power this flywheel. First, we've invested nearly $50 billion in the Frontier AI Labs. This was a meaningful commitment, but it represented a small fraction of our expected free cash flow over the same period. Further, to support the Frontier Labs infrastructure buildouts, we recently announced partnerships with 6 of the world's leading infrastructure capital providers: Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR, to establish financing platforms that will raise over $500 billion of third-party capital. With these partnerships, building on our unique, fungible, and durable computing platform, the AI Labs will be able to build and assess AI infrastructure funded by long-term institutional capital at relatively attractive rates. Last week, we announced that we secured land power shell capacity through our partnership with SoftBank Energy to exclusively host NVIDIA compute at their Portsmouth campus. The initial deployment, expected to support 4.25 gigawatts of AI factory capacity, will be utilized by OpenAI. Each generation of NVIDIA AI factory systems deployed at Portsmouth could represent approximately 1.5 million NVIDIA GPUs. And over 20 years, the site could support multiple upgrade cycles. Here's the essential economic point. The LPS commitment secures a long-lived AI factory site, while the NVIDIA compute within the data center can be upgraded repeatedly. This project deepens our long-standing partnership with OpenAI. OpenAI has committed to substantially deployments of NVIDIA AI infrastructure through 2030. OpenAI's existing and planned commitments represent approximately 12 gigawatts of NVIDIA compute. For another frontier AI lab, we will provide selective credit enhancement for nearly 2 gigawatts of compute. This complements the substantial NVIDIA compute capacity they've secured independently without NVIDIA's credit support. We recognize the scale of this support, and we know some will call this circular financing. We see it differently. We're going through a major computing platform shift, the creation of one of the most important technologies in human history, and these are once-in-a-generation companies. Their technology leadership is proven, and their customer traction and usage are skyrocketing. We expect them to become the largest technology companies in history. We believe these investments, measured against the strength of their demand, the business they create for us, the ecosystem they build on NVIDIA's platform, and the equity returns on our invested capital will be excellent. And our risk is limited. The NVIDIA compute platform is fungible and durable and can be redeployed to support other customers. For context, we expect demand from the AI labs, for which we expect to leverage our balance sheet to contribute toward roughly a quarter of our business next year. This remains compute we ship will be consumed by investment-grade customers or those that are backed by one. In Q2, we shipped less than 1% of our total data center revenue in Hopper 200 products to customers based in China in accordance with the US government licenses. Current Hopper shipments are dilutive to corporate gross margins, and given ongoing geopolitical uncertainty, there is no China data center compute revenue in our forward outlook. Moving to the rest of the P&L, GAAP and non-GAAP gross margins were both 75%, largely unchanged from last quarter due to a similar product mix. GAAP and non-GAAP operating expenses were up 10% and 11% sequentially, primarily due to high compute infrastructure costs and compensation and benefits costs. Our non-GAAP effective tax rate of 16% increased from a year ago, primarily due to higher revenue. On our balance sheet, inventory increased to $32 billion as we prepared for the Vera Rubin launch. Days of sales outstanding increased to 60 days, reflecting extended payment terms for large purchases by certain investment-grade customers to be shipped over multiple quarters. In Q2, we returned a record $26 billion to shareholders, $20 billion through share repurchases, and $6 billion through our quarterly dividend of 25 cents per share. Relative to our plan to return 50% or more of free cash flow, we have returned 60% on a year-to-date basis. And going forward, we intend to increase and return excess free cash flow net of strategic uses. Let me turn to the outlook for the third quarter. Total revenue is expected to be $108 billion, plus or minus 2%. We expect sequential growth to be driven primarily by ACI&E with data center, while growth in hyperscale is expected to re-accelerate in Q4 and into fiscal year 28 as supply of Vera Rubin grows over time. We see Vera Rubin accounting for about 20% of data center revenue in Q3. Looking ahead, our preliminary expectation is for fiscal year 28 revenue to grow approximately 70% year over year. Although we will work to close the supply-demand gap, we expect supply to remain a bottleneck at least through the end of fiscal year 28. Many of you have expressed concerns regarding our gross margins as component costs have risen significantly. As you are already aware, we are experiencing extreme pricing conditions in memory. The magnitude of the price increase has exceeded our prior expectations and are headed even higher into next year. As a result, we are resetting expectations today. For Q3, we expect GAAP and non-GAAP gross margins to be 74%, plus or minus 50 basis points. We expect margins to bottom in Q4 in the 71 to 72% range before settling at 72 to 73% in fiscal year 28 as executed price increases take effect in Q1. We want to be direct about this rather than let it linger as an open question. Memory scarcity today is being driven in large part by the AI build-out itself, and unlike a component that simply raises our cost with no offset benefit, tighter memory supply is a symptom of the same demand surge that's driving our own growth. We have long-standing, deep relationships with all three major memory suppliers, and we're working closely with them to further increase the capacity our roadmap requires. GAAP and non-GAAP operating expenses are expected to be approximately $9.2 billion and $9.0 billion, respectively. For the full year, we now expect OpEx to grow in the low 50s, driven by a broadening of our product portfolio and further increase in the usage of AI tools, which is already and will continue to enhance engineering productivity. For full year, fiscal year 27, we continue to expect GAAP and non-GAAP tax rates to be between 16 and 18%, excluding any discrete items and material changes to our tax environment. With that, we will now transition to Q&A. Operator, please poll for questions.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could give us color on the 70%, and what gives you the confidence to guide a full year out? You haven't been doing that. And then what's the gap between that amount of growth and the 100% demand growth? What is the kind of key constraint that separates those numbers, and could you close those gaps over time?
Yeah, thanks, Joe. As you probably are aware, AI has become useful, and the AI agents that are being adopted everywhere use an enormous amount of compute. First of all, the large language models are larger than ever because they're smarter than ever, and these agents go through reasoning and planning, multiple turns of tool use. The amount of compute necessary for an agent versus a human using it is probably 15 to 100 times, depending on the type of problem you're trying to solve. And so the amount of compute necessary is just extraordinary. That's a factor that almost everybody sees. The part that people don't see about our growth, because we're practically singular because of the nature of how we deliver products. I mean, we're the only company in the world that creates and builds, offers an entire AI factory platform, a full stack system. And customers can still mix and match. However, most companies just don't have the skills to do that or desire to do that. And so there's an entire part of the market that we experience growth. There's sovereign AI, the regional AIs, their neo clouds, their AI startups, their enterprises, where we're seeing, which represents about half of our business, and that's growing 100% a year. That part of the world's computing is likely to be larger over time than even what we're currently experiencing in the cloud. And so, so I think the demand that we see is driven by all of those factors. It is also the case that you can no longer procure technology per se and stand up these infrastructure. You've got to go secure the land, power, and shell, which oftentimes is a couple, 2-3 years out. All of the rest of the supply chain necessary to align the construction, the power, the cooling, all of the labor that's necessary. And AI infrastructure is creating so many jobs all over the United States and all around the world. It just takes a lot more planning. And so we're involved in securing infrastructure now, further down the pipeline. Just as a long time ago, people asked me, why is it that we're working with memory suppliers when we're a chip company. And today people understand it's really quite genius that we were working on our supply chain so far upstream. We work with power generator companies. We downstream. We work with land, power, and shell companies all around the world, and that helps prepare all of this computing that's going to be built that will ultimately deploy for our ecosystem and our customers. And so we just have a lot greater visibility now, upstream and downstream. It is the case that we've never forecasted or never guided to a year in advance. And even though our demand is much greater than 70%, our supply allows us to confidently deliver 70%. And we're going to continue to work with our supply chain to increase on that. But what we wanted to do is to be consistent with everybody, from our customers, our shareholders, our supply chain. Everybody sees the same view. And the reason why that's important is because, everybody's putting a lot of resources at play. And so we wanted to make sure that everybody has the same set of information. And we've got a huge year coming up next year. And it's going to be pretty extraordinary.
Your next question comes from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's tremendous investor focus on your inference market share. Can you speak to the evolving workloads you're seeing with agentic AI and how you see your share evolving here over time, particularly when you reflect on the growing value of the TAM you're seeing with each new full stack generation, your expectation for greater growth from ACIE, and then also including Grok 3 LPX? We'd love to hear your thoughts.
Yeah, thanks, CJ. The AI lifecycle is getting way more complex than it used to be, and it's playing into NVIDIA's architecture much more greatly than it used to be. And so you could kind of see it as 4 phases. There's the first phase, which is preparing all of the data that you need. Some of it is synthetic, some of it is real, some of it is human labor and human labeled and generated. Pre-train the models, and then there's post-training, the third phase, and then there's the agentic inference. And agentic inference is extremely complicated. And so every one of those phases are complicated. The thing that's really great about the NVIDIA architecture, and we created this with NVLink 72, and it was a big surprise on the world when we first created the world's first rack scale architecture. It was hardly easy, and it was very challenging building the first generation. We're now in our 3rd generation of NVLink 72 rack scale systems. We had to reinvent the entire supply chain, reinvent systems, reinvent the technology, redistribute our software, refactor our software. Everything, every aspect of it was hard. But what it allowed us to do was to create one fungible system that allows us to transition from data creation, data preparation, the pre-training, the post-training, to agentic inference. The benefits to customers is incredible. And the reason for that is because you've just spent, and we just mentioned, each gigawatt of technology and NVIDIA's revenue exposure in the Hopper timeframe with Hopper plus InfiniBand, and now Vera Rubin and CPU, and 3 types of different networking, because it takes that many types of networking to address the entire world's data center, not to mention the scale-in security networking and the scale-across multi-campus networking. So you could argue 5 different types of networking systems, and then of course Grok. And all of that increased our revenue contribution or revenue opportunity per gigawatt to $40 billion. So each gigawatt of data center increased from, say, $30 billion about 5 years ago to now $60 billion today. Of course, the productivity is tremendous. The performance is incredible in comparison, but you're talking about a $60 billion investment. And to the extent that you could use it across multiple phases of the AI lifecycle, run every single type of model you can imagine running on it, whether it's diffusion or autoregressive or state space or some hybrid version of that, every version of attention mechanism you can think of, small or large models, the investment that you make will be preserved and useful and productive for a lot longer time. And so I think our advantage in this new world is really quite extraordinary, and it could explain, why it is that our growth is actually accelerating. It was already large, but now it's accelerating. Let's see, you asked about Grok. I was super excited about Grok 3. We achieved a record token interactivity rate, extremely low latency performance generation. The team is doing fantastically. We spent the last several months fusing the NVLink architecture, which will be the core, and it'll be the core engine. And then for services that would like to have super high interactivity, super high speed token generation done, the throughput is going to be a lot lower. The cost per token will be higher, but you could associate it with high ASP services. And so for those companies, you could bolt on one of our Grok accelerators. I'm super excited about that. But the vast majority of the world's data centers will just be Vera Rubin NVLink 72.
Your next question comes from the line of Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. So the 70% growth in fiscal 28, which I guess is sort of calendar 27, so that's something like, I don't know, a $200 billion uptick versus the prior outlook. If I back it out, the prior outlook was $1 trillion over the 3 years. So this is probably 200 billion more. I was just wondering if you could talk us through the contributors to that increase across the different products of Vera and CPUs and Grok and everything else. And also, you talked about your price increase that takes effect in Q1. So I assume some of this is pricing. And I guess I'm also curious, maybe I'm squeezing too many questions in here, but I'm also curious, just it's a constrained number. What would it be if it wasn't constrained?
The unconstrained would be a lot higher. It's we grew 100% year over year this year. The unconstrained, is significant, and so we're just going to have to go work hard to get more capacity. And we have a large supply chain. We have a really gigantic supply chain, and so we have incredible partners, and we've secured a lot of supply, but we just need a lot more. To break it down, the way to think about that is most people see just hyperscalers, and that's half of the picture. The other half of the picture is what we call AC, and that's all the enterprise, the neo clouds, the sovereign AIs. That part of the world is invisible to everybody, and the reason for that is because they don't buy custom chips. They don't buy chips one at a time. They really need an entire factory platform built for them. And so that's a space that we add just a tremendous amount of value. Now, of course, back in this hyperscale space, that's growing incredibly too, right? You know that they now have backlogs of $2 trillion. You know that when they stand up NVIDIA Compute, when that happens, their revenues go up, their earnings contribution go up. Compute is profitable, very profitable today, and compute directly translates into increased revenues. And so there's just a race to want to bring more NVIDIA Compute online, both at the hyperscalers, but what you don't see is just really tremendous opportunities outside of the hyperscalers. But the other part of it is, and it's the reason why we mapped it out for you. In the case of Hopper, we were at about 18 billion per gigawatt. For Grace Blackwell, we're about 25 billion per gigawatt, and for Vera Rubin, it's about 40 billion per gigawatt. And the productivity is, X factors increase in each generation, and so customers want to race to the next generation as fast as they can. Meanwhile, because NVIDIA's compute is so productive, the tokens they're generating, the GPU hours they're renting out, is insanely profitable, as you know. Their margins are fantastic. And so all of that is just simultaneously happening. I think the big picture is that we're going through this platform shift, and it affects every computer company. And every industry in the world uses computers. So therefore, every industry is affected. Every company is affected. And this new way of doing computing is intelligent. It's not based on retrieval of files, but it's now generating intelligence. And that requires compute. But the results you get is phenomenal. The results you get is tremendously better. And so, we're just seeing that across the world. Everybody wants to be part of the AI revolution. Everybody will have to be part of this computing shift, and everybody has to build infrastructure.
Your next question comes from the line of Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question, and thanks for providing all the transparency and all the commitments and guarantees that you have for a number of years. When I just add up everything that's in the CFO commentary, I get to a number of about 500 billion or so, obviously over the next several years. So I had a few questions related to that. First is that the takeaway that the sum of all your ecosystem investments over the next several years is in that ballpark, or are there other equity or other investments that could still be ahead? That's one. Secondly, if there is a specific cash, part of that that we should think about in fiscal 28. And then, Jensen, a lot of these investments are, designed to help the frontier labs, especially OpenAI and Anthropic. But both of them are designing their own custom chips. In fact, OpenAI just, in the last few days spoke about Jalapeno and their claims about being better than Blackwell and so forth. So how are you balancing this dynamic where you want to invest a lot in the ecosystem, but part of that ecosystem wants to develop competitive solutions? Thank you.
Well, we're building something very different. Whereas many of these XPUs are inference-specific chips for one cloud or one service, NVIDIA is a platform, an entire AI factory platform that spans the entire AI lifecycle that you can use in any cloud. It's in every cloud. You can run anywhere. We'll help you set it up anywhere. And so we built something very different. All of the AI services at some point are going to want to go around the world, and those data centers won't necessarily be just built by them. And also, I fully expect, and so they're going to run, and I think they're going to run on NVIDIA all around the world. And of course, I think our technology, I have 100% confidence that our technology will continue to be extraordinary for them, and that the economics of using our technology, whether it's from data processing to training, to post-training, to agentic processing, our technology is going to be extraordinary for them. They're going to use it. And so I'm very confident that they're going to be customers and partners of ours for a very long time. Now, having said that, taking a step backwards, investing in these two companies, or there are several AI labs that we've invested in, investing in these companies are once in a generation opportunity. I think the only regret that I have is that I didn't invest more and sooner. And two of the companies will likely go public soon, and others will follow. And these will be some of the most consequential technology companies in history. And so I'm delighted to be their friend. I'm delighted to partner with them. I'm delighted that they're building an ecosystem on top of the NVIDIA architecture. I'm delighted that they're counting on us to scale up. And I have 100% confidence that, through quite a long period of time, they're going to be utilizing NVIDIA compute for a lot of their computing. And so I feel great about it.
So Vivek, let me add a little bit more regarding the commitments and the portion within those commitments, which is our supply commitments. This is essential. This is essential for the raising of Vera Rubin today, as well as all next year. You can see that those commitments, the biggest parts of them are in the first 3 years, and we will use that to build the products that we need. This would also gives us the confidence in terms of our growth and revenue, given how much we have already aligned in commitment in terms of our supply, as well as capacity that we would need.
Your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Hi, thanks a lot. Jensen, I wanted to ask about open source. There's a lot of talk about that these models could gain share for workload in the US. You're obviously well positioned with Nemotron, but on the other hand, a lot of the end demand is being driven by these big frontier model companies. So there's a lot of investors that equate open models as being negative for the growth of those companies. So how do you sort of put and take that? Do you see the rise of open models as being good for NVIDIA or ultimately negative? Thanks.
The world will need both closed models and open models. And both closed models and open models are skyrocketing in use. I would say nearly all open models run on NVIDIA. And the reason for that is because NVIDIA's footprint around the world is the highest. And our architecture is the most fungible. It's everywhere. It's in PCs and edge devices like DGX Spark, which is doing great, all the way to robots and workstations and your on-prem data centers. Open models are doing incredibly well. Closed models we know are doing incredibly well. The Frontier Labs, their sales are skyrocketing. Their margins are fantastic. They're generating profitable tokens. They're only limited by the amount of compute. That is equally true for open models. And our position in open models is very good, because the CUDA ecosystem is literally everywhere. The open models are also foundational to just about every AI startup and every enterprise company around the world. It's vital to them. And the reason for that is because you should rent intelligence, strong intelligence, smart intelligence, wherever you can, which is the reason why, we rent it. And I encourage my employees to use the cloud service as much as they can. But every major company and surely every country and every startup needs to build their domain specific, their proprietary AI, their proprietary alpha. And the open models reaching frontier levels has made it possible, has enabled them to all do that. One of the areas where frontier models is vital is cybersecurity. You see the number of cybersecurity companies that are enabled by frontier models so that they could have massively distributed, continuously running autonomous cybersecurity systems to defend. Those companies are emerging. There's some amazing companies. They couldn't do it without open models. And so open models is both incredibly successful and has finally reached the frontier, but it's also vital to the American economy. It's vital to the world economy. It's vital to companies to build their own proprietary AI. You can't do it without one or the other. Both are going to be extraordinarily successful. And lastly, as you know, our market footprint of all AI models, I think we're the only platform, I'm fairly certain we're the only platform that runs every frontier model. And whether it's closed or open. Most of them were built on NVIDIA, and so they run great on NVIDIA. And so we're delighted by any model succeeding, so long as models succeed. I'm very happy. And both closed and open models are going to succeed, and they're both simultaneously driving our sales.
Your next question comes from the line of Ben Brightsis with Melius Research. Your line is open.
Yeah, hey, thanks. I wanted to ask
you a question, Jensen, about demand in a different way. You talked about demand growing 100% next year, and I wanted to kind of get a sense for a couple things driving that, and even beyond that. And there's two concepts here. There's recursive self-improvement, which apparently at Anthropic and OpenAI is going very well with AI that improves itself. And even OpenAI said they could hit AGI by the end of this year. And with the developments in RSI as well as AGI, what happens to industry demand? Does it inflect further? And what does it mean for Nvidia when those things take place? And how are you looking at that as a demand catalyst? Thanks.
I appreciate that. It's going to inflect further. Today, the vast majority of AI is prompted by people. I believe that this last month it has crossed. Most AI are now agentic, but in the future, every company will have a whole bunch of agents. We have 40,000 employees roughly. In the future, we'll have 400,000 agents, 4 million agents, and those agents are running continuously. They're running in the background. If you know anybody who builds edge, personal AI agents, and they run it on their like a DGX Spark, and I know a lot of people who run it on DGX stations. This incredible workstation that we built, and you can buy it from Dell, and they're incredible. And these AI agents running on a DGX station runs 24/7 because you got stuff for it to do all the time. And so when the world goes to fully agentic systems, you're going to have agents running all the time, working with other agents running all the time, and those will be working in the background, improving your company, improving your lives. In a lot of ways, we're kind of recursive at this point, and you could argue it's coarse-grained, but every time you run through an agent, it reflects on how it could do a better job next time, and it updates the skill file. And so the skills document, the markdown, is updated at the end of every single one of them. And so next time you run it, it's going to get better. It's a kind of a loosely coarse-grained self-improvement. And so you see that all over, always. And so in a lot of ways, and for many tasks, we could say that we've already achieved AGI. I think all of those milestones and all those, they're kind of senseless at this point. I think the most important thing that matters for the industry is that, one, AI is now doing productive and useful work. Two, AI is generating profitable tokens. And three, if we had more compute, we could generate more profitable tokens, which results in more profit for all of the services. This is the exact phase where we're at, which is the reason why everybody's leaning in.
Your next question comes from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon, and thank you for taking my question. If you think about the 100% growth you talked about in terms of the unconstrained demand growth you're expecting, the 70% you expect to fulfill in terms of supply, can you maybe talk about or rank order some of the most acute constraints, whether that be things like data center power and shell availability, DRAM, wafer foundry availability, et cetera? If you could maybe help us understand, which are the biggest among those, that would be very helpful. Thank you.
There's something funny I could say, but I'm going to just not. Last year, one of the funnest things to do is just to go figure out where I go for dinner and who I have dinner with. And their stock price doubles the next day. I think the answer is our entire supply chain is challenged, and it's everybody is really running flat out. And more capacity is coming online all the time, which is one of the advantages. What's going to happen this year? It's not going to come online in just an instance in time, but it's going to come online every day. Yields are going to get improved. We're going to be doing yield improvement. We're going to work hard on working with every one of our suppliers, and so we have it's not even next year yet. And so we've got lots and lots of time to work hard every day. And so at this moment, we have supply for 70%. We have more supply than 70%, but about 70%. Our demand is much higher than that. And we've got to go work hard, or, we're going to be disappointing customers. And we like not to disappoint our customers, and we like to work hard for them. And so I'm going to need the help of the entire supply chain to help me out here. But they all know that. What I'm telling you about our needs for next year is exactly consistent with what I've told them. Everybody's on the exact same song sheet, and I'm trying to be as transparent as we can because we're talking about big numbers.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I want to go back to the gigawatts, the 25 to 40, and maybe try and understand, I think, Jensen, you said at some recent conferences that, that's going to further scale. So, as we think about the path even beyond Vera Rubin, we think about Vera Rubin Ultra and so on and so forth. Should we really conceptualize 40 billion goes to 60 billion, 80 billion? And then, I guess, underneath of that question is, how do we kind of think about your ability to scale the capacity deployments? Is it a linear function, or is there something that, kind of unlocks your ability to supply more demand as we look through fiscal 27?
Great question.
Or 28, sorry.
Yeah, great question. Great question. And very simple. Is our goal to put as much compute on a plot of land? Is our goal to put more compute into 1 gigawatt or less? And so obviously, we would like the speed of light answer. The perfect answer is actually infinity per gigawatt. And so if we could literally get $1 trillion of compute into 1 gigawatt and one piece of land power shell, it would be a fantastic outcome. And so the answer is directionally in that direction. We started in the world of general purpose computing during Moore's Law. We were probably, pick your favorite number, but I'm going to go with something like $5 billion, $3 billion per gigawatt of compute with general purpose computing. And then eventually with Hopper, it was 18. Now Grace Blackwell is 25. Next, Vera Rubin is 40. And after that, it's going to be higher. And that's excellent. That's fantastic for the industry. It's fantastic for customers. So long as the productivity of it continues to grow, the durability and the fungibility continues to grow, then people are happy to invest in assets that generates revenues, generates profits, and helps them recoup their returns so incredibly fast. I mean, I heard the other day that return on investment capital is now less than a year. And we're talking about $50 billion data centers. And so that tells you something about the productivity of NVIDIA's technology and the rentability of it. I want to thank all of you for joining us today.
There are no further questions at this time. Toshiya Hari, I turn the call back over to you.
Thank you. Before we close, please note that Jensen will be participating in a keynote fireside chat at the Goldman Sachs Communacopia and Technology Conference in San Francisco on September 10th. He'll also be giving a keynote at GTC Berlin on October 21st. Our earnings call to discuss the results of our third quarter of fiscal 2027 is scheduled for November 17th. Thank you for joining us today. Operator, please close the call.
This concludes today's conference call. You may now disconnect.
Okay. So I will try to come on tomorrow morning for our Daily Markets podcast and maybe do a little more research, probably dissect that transcript tomorrow. Nvidia's up to 4.5%, let's call it, after the earnings call. And, if I write a Substack post or not, Probably not on this one, just because I think that there is really not much to repeat. I think you got the headlines. Obviously, I'm not selling it, so it wouldn't really make a big difference on writing a post on why I'm not selling it. That would be pretty boring, but maybe I'll give an update probably Friday, Thursday, which is tomorrow, maybe on why I bought Meta today. And, it's potentially a swing trade for me. And I'll give you my updated portfolio holdings. I don't even think Meta is actually a top 20 holding in my portfolio, so it won't be shown on the sheet. And I'll kind of give you an idea of why I think Meta really, took one problem off the board, one headache off the board, and the rest of the headache we can get through this, I think. And I think it would be worth a swing trade, to be honest with you. I just think it's too cheap. It's too cheap. Even with the concern of their CapEx and their I guess they didn't really guide properly, right? It wasn't a great guide on their last quarter. And, the stock has been hit ever since then. So what's the catalyst for Meta? It's just AI and giving you better ads. There's got to be another catalyst. So I don't expect like a wild swing and, investors to pile into Meta. It would have to be a broader macro story. And that's pretty tough because we're heading into midterms. We're going to be heading into a very volatile few months here. So, yeah, I mean, I don't know if it's a swing trade. I may just hold it through the midterms. I'm happy to do that and see what happens. So thank you guys for watching. Rigatoni Capital can be found on Spotify, YouTube, Apple, and where else? Substack, of course, Rigatoni Capital. All right, guys, have a wonderful night, evening. Take care.